All right, let's talk about Ottawa's housing market. For what feels like forever, it's been a wild ride, right? Well, today, we're going to dig into the very latest numbers to see what's really going on. Because after years of crazy competition, the big question on everyone's mind is the ground finally starting to shift? Okay, let's get into it.
I mean, for the longest time, buying a home in Ottawa felt like a full-contact sport, didn't it? Just endless bidding wars. But the data coming out of this fall, it's telling a totally new story, a story of change. So, the big question is, has that frenzy finally cooled down? Let's follow the numbers and see what they tell us.
Okay, so first up, prices, sales, and property. And here's the thing. If you just glance at the top-line numbers, the market looks, well, pretty stable. But as soon as you start to peel back the layers and break it down by property type, you realize it's not one single market at all. It's really like a tale of three very different markets, each with its own drama.
So, on the surface, things look pretty calm, right? The benchmark price for a typical home is up just 1.1% over last year. That doesn't exactly scream market chaos. It kind of whispers slow, steady growth. But trust me, that one little headline number is hiding some absolutely fascinating details.
Now, before we go any deeper, let's quickly talk about what this benchmark price thing actually is. It's super important. It's not just a simple average, which can get skewed really easily. Think of it this way. It tracks the value of a typical home, filtering out all the noise, like if a bunch of mansions sold one month. It's honestly the best tool we've got to see the real trend in prices. And this is where that tale of three markets just jumps off the page. I mean, look at this divergence. It's incredible. You've got single-family homes just kind of holding steady, which is fine. But then you have townhouses. They're absolutely on fire. Prices are up almost 8% and sales volume has soared by over 27%. And then you've got apartments, which are going in the completely opposite direction. Prices are down, sales are way down. Three totally different stories. But you know what? Prices are really only half the story. If you thought that price data was interesting, wait till you see the supply data. It's dramatic. This is where the big shift in the market becomes absolutely undeniable. So check this out, 2,832. That isn't just a number, that's a massive headline. Why? Because in September, Ottawa saw more new homes hit the market than in any other September in history. Sellers are, without a doubt, coming out in force. And of course, all those new listings start to add up. By the end of September, the total number of homes for sale was just under 4,400. That's a huge jump, almost 20% more than this time last year. And if you're a buyer, what does that mean? It's simple, way more choice and a whole lot less pressure.
And let's just put that number into perspective for a second. We're talking about the highest level of homes for sale in over 5 years. So you remember those days of desperately refreshing your screen, hoping to see just one or two homes that fit your criteria? Yeah. For now, at least, those days are over.
Okay, so we've got all this new supply, but how does that stack up against demand? Well, here's how we measure that. We use a really neat metric called months of inventory. The idea is super simple. If not a single new home was listed starting tomorrow, how long would it take to sell everything that's currently on the market? It's a fantastic barometer for the overall health of the market.
And here's where it all comes together. This connects right back to our tale of three markets. See how townhouses, which are in super high demand, actually have the least inventory, just over 3 months worth. But then look at apartments. Over 5 months of inventory. They're the biggest piece of the pie. And that glut of apartments for sale, that's exactly what's putting that downward pressure on the prices we saw earlier. It all makes sense now, right? Okay, so let's recap. We've got prices going in different directions, and we've got a flood of new homes for sale. So, what happens when you put all of that together? Well, what you get is a fundamental redefinition of the market itself. To make things official, to really put a label on the market, analysts use one main indicator above all else. It's called the Sales to New Listings Ratio, or SNLR for short. And it's really just a straightforward comparison. How many homes are actually selling versus how many new ones are coming onto the market every month.
And the rules of thumb here are super clear. If that ratio is over 60%, it's a seller's market, no question. If it's somewhere between 40 and 60%, things are pretty balanced. But when that ratio drops below 40%, that's when the power officially shifts.
So, the moment of truth. For September, Ottawa's SNLR clocked in at 38%. Yep, after months of just hovering in that balance zone, the market has officially crossed that critical threshold. And that's it. That's the whole ballgame. This number answers our opening question directly and without any ambiguity. Based on the number one metric the industry uses, Ottawa has officially shifted into a buyer's market. That frantic seller's market we all knew? It's over. Wow, that is a huge shift. So let's get practical. What does this new normal actually mean for you if you're thinking about buying or selling a home in the city? Let's break it down.
Okay, so if you're a buyer, the message is loud and clear. You have more choice, you have more time to think, and you definitely have more power to negotiate. That pressure to make a snap decision in a crazy bidding war, it has eased way, way off. Now for sellers, it's really just the other side of that same coin. You've got more competition out there, which means pricing your home correctly right from day one is absolutely critical. And having a great marketing plan, that's not a luxury anymore, it's a flat-out necessity.
Now, it's really important to get this next part right. Just because the data points to a buyer's market, that does not mean we're talking about a market collapse. Not at all. In fact, the president of the Ottawa Real Estate Board, Paul Kutzen, is emphasizing words like balance and resilience. So the feeling from the experts isn't panic, it's more like a return to a stable, steady, and frankly, a more predictable market.
All right, so let's do a super quick recap of the key takeaways here. 1. The power has officially shifted to buyers. 2. A record surge in listings means you've got more choice than we've seen in years. 3. The market is not a monolith. Townhouses are still hot, while apartments are, well, they're feeling the chill. And finally, the big picture here is stability, not some crazy crash or boom. Which really just leaves us with one final thought to chew on. For years, buyers in Ottawa have been up against this wall of low inventory and insane pressure. But now, it really feels like the tables have turned. So with more homes to choose from, with way less competition, and with prices holding steady, you've really got to ask yourself, is this the moment? Is this the window of opportunity that so many people have been waiting for? Something to think about. Thanks for joining me.